Well, hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, it's a Friday morning. Of course, thank God it's Friday, and the bulls are also in good stead, as I, mentioned in my opening teaser as well. The setup is fairly positive. We have mixed news coming in from Wall Street, but the GIFT Nifty hinting at a positive start. We will be watching out for whether or not we manage to extend the record-setting streak on the Lal Street and end the week on a high above that 23,600 mark or not. The Nifty Bank has also staged a very good comeback this week. We did see record levels on the Nifty Bank Index, very close to that 52,000 level. If that rally extends today, who knows, 52,000 could become a reality today itself on the Nifty Bank Index. But lots to talk about over the next 30 minutes. We will be focusing in on the IT stocks, on some of the metal names, given the fact that they've seen, strong buying interest. There are some block deals lined up today as well. So lots to talk about, and of course, not to forget your queries, stock-related queries that we will take up with our experts on the show. So if you have any queries, keep them coming in on our feed on YouTube, and we will try and get them addressed. But as usual, before we move further, let's take a look at the top headlines at this hour. Wall Street ends mixed, with the Nasdaq and S&P 500 closing with losses after hitting record highs in intraday trade. The Dow, on the other hand, gains in a volatile session. All three indices are actually poised for weekly gains. European markets close largely higher as the Bank of England keeps interest rates unchanged. Asian markets, on the other hand, trade mixed, with the Japanese Nikkei gaining after the release of inflation data for the month of May. The GIFT Nifty, meanwhile, is suggesting a flat but positive start for the Indian market. Crude prices remain range-bound, with Brent trading around that $85 a barrel mark. Gold, meanwhile, has risen to a two-week high as hopes of an impending rate cut by the Fed raises demand. And from New York to Srinagar, the world is celebrating International Yoga Day. In fact, Prime Minister Modi leads celebrations by the Dal Lake in Srinagar on the occasion of the 10th International Yoga Day. The event sees over 7,000 people participating and joining the PM in performing yoga, keeping in line with this year's theme of Yoga for Self and Society. Right, just about 11 minutes to go for the markets to open, and looks like we are set for a positive open, given the fact that the GIFT Nifty is hinting at a start around that 23,600 mark. In fact, yesterday, intraday level, we hit a fresh high. The Nifty managed to end, around that 23,567 mark, which was a record close, by the way, up somewhere around 50 points. The sensex, in fact, has seen the best winning rally in 4 months, because it has gained for a 6th straight session. Banks, of course, continue to drive gains on the indices, because ICICI Bank, HDFC Bank, they were the top contributors on the Nifty for a 3rd straight day. And Reliance was also among the big contributors on the Nifty yesterday. Fertilizer stocks, ahead of the crucial GST meeting tomorrow, they were extending gains. Some of the fertilizer names like Fact, Chambal Fertilizer, Deepak Fertilizer, all of these counters saw gains of somewhere around 8 to 10%. In fact, I think Fact was one stock that rallied somewhere around 20% yesterday. Chemical stocks, on the other hand, also saw some buying interest. On the other hand, India VIX, volatility gauge continues to ease. It eased somewhere around 3% yesterday. In terms of the FNOQs, the put call ratio, jumped to 1.29 vis-a-vis 1.10 in the previous session. And if you look at some of the stocks that will be in ban, in fact, the new entrants in the FNO ban list are the likes of Birlasoft and GNFC. Still in ban or continuing to be in ban are stocks like Balrampur Chini, Hindustan Aeronautics, Hindustan Copper, Indus Towers, Piramal Enterprises, and some of the stocks that have exited the FNO ban include the likes of India Cements, SAIL, as well as Chambal Fertilizers. FIIs continue to buy into the Indian market. I think it was the 5th straight session of FII buying that continued. So FIIs bought stake worth 415 crores in the cash markets, while DIIs were net sellers yesterday to the tune of somewhere around 300 crores in the cash market. On that note, let's bring on board our technical expert for today then. Joining me is Osho Krishan, who's the Senior Analyst, Technical and Derivative Research at Angel One. Osho, always a pleasure chatting with you. Given the fact that we have been clocking in, record close on a daily basis, What are your expectations in terms of where the index will shut shop today? Do you expect us to shut shop around that 23,600 mark today? And in terms of Nifty Bank also, the kind of up move we've seen yesterday, obviously there was some bit of consolidation after the strong move that we saw day before yesterday. But here on Nifty Bank, do you think it can make a dash at that 52,000 level today again?
Very good morning, Nandini. Firstly, thank you for having me at your show. Well, now coming to the queries on Nifty and Bank Nifty, then there are few positive developments in both the counters. Firstly, for Nifty, if I have to say, then for Nifty 23,500 and 23,300 are the strikes on the put front, where we are witnessing a very decent writing in terms of support. So I am expecting that 23,500 should be acting as a very strong support for Nifty for the time being. But simultaneously on the higher end, 23,700, 800 call writers are also taking a very strong positions. So on the higher end, 23,700 and 800 should be acting as the first resistance for Nifty. Overall, I am not very much aggressive for in the Nifty for the time being, but overall the consolidation is likely to happen on the higher end only. So there might be possibilities that we witness a fresh lifetime high, and we are opening at a fresh lifetime high only. So there is a possibility that we can witness another 100, 150 points of up move near about 23,800. But I am expecting the closer should be near about 23,600 and 700 in between these levels, because there has been some consolidation going on for Nifty. For Bank Nifty comparatively, I am having a very bullish approach, because for Bank Nifty there has been very positive developments, and all the basically private sector banks, financials, and even some of the PSUs banks are also contributing to the gains. So for Bank Nifty, I am expecting that it might breaches the zone of 5,200 for intraday swings, but the closing should be near about 51,500 towards 52,000 odd levels. While on the positive development, 51,000 and 51,500, the strike price are witnessing very decent writing positions on the put front. So these should be acting as a very strong support zone. So any dip, if there will be any dip towards 51,500, that should be auguring very well for the buyers. While on the higher end, I am expecting 52 and 52,200 on the spot levels to act as the immediate resistance.
All right, those are the kind of resistance levels to watch out for on the Nifty Bank Index. But let's talk about some stocks that will be in focus. We were discussing Nifty Bank today, but among the private banking lot, HDFC Bank, ICICI Bank, Axis Bank, these are the three stocks that have been the top contributors on the Nifty for the last three sessions. Do you expect more up move on the likes of HDFC Bank, which has underperformed its peers? If you look at the 1 year charts, you'll see a gross underperformance coming in from the likes of HDFC Bank and Kotak Bank. Do you think in this leg of the up move, chartically, these two are the best poised among the private banking names?
See, obviously, if I have to tell you about from the medium-term perspective, then HDFC Bank still is at a very lucrative zone, and one should definitely try to accumulate this counter from medium-term perspective. But if I have to talk to you about the short-term perspective, then yes, this counter has surged almost 5% in the week and nearly 10% in the month. So that is a very rare phenomena for a big company like HDFC Bank. So I am expecting that there might be some kind of cool off or corrections or profit booking that can be happening near the zone of 17,000 zone, because 17,000 again is having a very decent piled up position for the current month expiry. So I am expecting that it should consolidate near the zone of 1700 in the near period. So one should definitely try to book their profits. Even on the technical front, majority of the parameters are on the overbought territory. So I am not very much aggressive from here onwards in a very short term perspective. But the time it breaches the zone of 17,000, then it will be having a very strong move, and it might move into uncharted territory. So for short term, one should try to book around 1700. For medium term, definitely one should keep holding this counter.
All right, that's a view on HDFC Bank. 1700 crucial level to watch out for, and that you should keep in mind. But another stock that will be in focus today will be Aster DM, right? There's likely to be a block deal when Olympus Capital Asia is likely to sell somewhere around 10% equity. The base size is somewhere around 5% with an upsize option of 10%. This is according to sources. And the floor price has been set at 331 rupees per share, which is at a 7% discount to yesterday's close price. Looking at the charts of Aster DM, since the 15th of April, The stock has, come off quite a bit. It's down 30% or thereabouts. Do you expect the trend to reverse here on, because the stock has been stuck in a downtrend? If you look at 3-month chart, 1-month chart, it has been in consolidation mode. Here on, any kind of signals of a turnaround on the charts?
See, overall, there has been a strong consolidation going on in this counter, but it is opening at a gap down level below the 100-day EMA on the daily time frame. So the trend likely to remain on the sideways to negative terrain for the timing. I am not very much bullish in the counter until it breaches the zone of 370 or 365 on the higher zone. So till that time, there might be a possibility that it might hover within a range. On the lower side, the immediate support or the immediate demand for this counter is near about 335. On the higher end, 365. So this is the immediate range, and one should wait for this range to have a decisive breakout on either side for having a next set of a trend movement in this counter.
Right, that's the view then on Aster DM. But talking about a PNB housing, yesterday the stock was under pressure because there was a block deal in the counter, but names like Morgan Stanley and BNP Paribas have bought their stake, wherein Asia Opportunities Fund and General Atlantic Singapore have sold their stake worth 1,000 crore rupees or thereabouts. But here, are you spotting a trade now? In the last 5 sessions, we've seen the stock heading lower. But going forward, should one really use this dip to get into this counter?
See, overall, this counter is at a very interesting position, because if I'll be seeing the monthly chart for PNB Housing Finance, then near about 800 is the level where it is facing strong resistance. But this month there has been a strong traction in terms of volume, so I expect that this month the closure should happen around above 800, and if it happens, then from here onwards there will be a strong upsurge in this counter. For immediate basis, 200 point of upside is expected in PNB Housing Finance, so 1000 should be the target for short-term perspective. But closing above 800 is very crucial, because it has attempted the zone of 800 many a times, specifically in the last 5 to 6 trading months. It has been hovering, or it has been facing strong resistance around 800 odd levels. The time it breaches the zone of 800, then from there onwards one can definitely expect a very strong momentum and try to gauge the momentum for approximately 200 odd points.
All right, that's the view on a PNB housing. But there is some negative news flow around a JM Financial, right? It has been barred by SEBI from facilitating IPOs. In fact, it has voluntarily decided not to go ahead and take IPO financing up as well. But this comes as a negative setback for the company. So could we expect a knee-jerk reaction in today's session?
See, definitely. If I have to see the overall trend for this counter is obviously a down to sideways kind of a trend. It is hovering right now. But there was some traction which was going on in the last 4 to 5 trading sessions. But again, the 200-day SMA still signifies a very strong resilience for this counter. So I'm not very much bullish for the time being. It might attract further consolidation in the near period, but for the timing, it's better to stay sidelined for this counter.
All right, stay on the sidelines. Just one correction, SEBI has barred the company from acting as lead manager for debt issues, and it has voluntarily decided to completely discontinue its IPO finance business. But on that note, let's take a look at how the markets have opened up. 23,600 on the charts. We have opened up with a good, uptick of 50 points on the Nifty. The sensex is also above that 77,600 mark. A triple-digit move coming in, 150 point kind of a move. Mid-caps outperformance continues, 0.5% uptick on the Nifty mid-cap index. But banks have taken a breather. There were signs of consolidation on the Nifty bank index yesterday, and it is visible today as well. It has opened very flat, but in the negative zone. 51,770 is where the Nifty bank is at right now. But let's pull up the Nifty metal pack. That was the top performer in yesterday's session. Most of the metal counters were shining in trade. You had the likes of Vedanta, and you had JSW Steel, Tata Steel and the likes, and today as well 0.5% up move coming in there. So the metal pack continues to witness buying interest. Aside of that, let's take a look at the auto pack that has been under pressure over the last couple of sessions, has seen some bit of profit taking. Today as well, it has opened in the negative zone. Let's pull up some of the other indices then. IT pack, that should be in focus given the fact that Accenture has tightened its guidance for FY24, but it's a big or a good uptick on the IT pack. It's up 2%. Of course, there have been certain positives as well that have been pointed out by Morgan Stanley when it comes to the Accenture's third quarter performance. In fact, Morgan Stanley has said that there are green shoots, there are positives, although there are no signs of any kind of improvement in consumer discretionary demand. So yes, IT pack in focus. Aside of that, let's take a look at the realty pack as well. Yesterday, it had made a good comeback after some bit of profit booking in the day previous to prior to yesterday. So 0.5% uptick there as well. We are seeing some bit of outperformance continuing. In terms of the individual movers on the index, you have LTI Mindtree. That's the big mover, 3.5% uptick. Tech, Mahindra, HCL Tech, TCS, Infosys, all of them are among the top Nifty gainers. The top 5 names on the Nifty in terms of gainers are all from the IT pack. Titan, Bajaj FinServ, Adani Ports, SBI Life are some of the other movers. On the flip side, you have the oil marketing companies like BPCL witnessing some bit of pressure. Tata Steel, Coal India, HUL, Kotak Mahindra. So yes, some of the private banking names, you have the likes of some steel counters like Tata Steel and Reliance Industries as well, witnessing some bit of selling pressure. HDFC Bank also under pressure, and so is M&M. So some of the auto names continue to lose in trade. So all in all, a good open. It's a 200-point uptick on the sensex and a 60-point up move on the Nifty around that 23,630 mark. But looking at the open, we are witnessing some bit of volatility when it comes to the Nifty Bank Index, just about trading in the green right now, Osho. Would you expect 51,800 kind of levels to be taken out, because we are around that level right now?
See, in the recent, in the first half an hour or 45 minutes, I expect the volatility will be there. But overall, the trend remains bullish. If there will be any kind of dip, let's say towards 81,650 on the spot levels, then that should be auguring well for the buyer. So definitely one can approach Bank Nifty with a buying perspective, because major of the counters are still having very bullish undertone. So better to stay on the bullish side with a buy on dip approach for Bank Nifty. So 51,650 should be acting as a very strong demand zone, followed by 51,500. So definitely 51,650 one should try to accumulate, with keeping a stop loss a bit below 51,500 for higher target of nearly 52 for the day.
All right. What's your take on the IT pack? We have Accenture earnings, and although the revenue guidance has been tightened, but there are a few positives. Pick up in smaller deals, and consulting business may return to growth. That's what Morgan Stanley has said, looking at Accenture numbers, even though discretionary spending is still elusive. In terms of, the charts, LTI Mindtree, HCL Tech, Tech Mahindra, TCS, which one would you prefer at the current juncture?
See, firstly, I was having a persistent on my radar, so it has given a consolidation breakout. So firstly, I will try to give a technical view on persistent, because it has given a very strong movement in the last couple of trading weeks, followed by a decent consolidation near about 38.50, and today onwards it is approximately 3% high from here onwards. So this is a very strong reversal kind of a move that one can expect in persistent in the near period. So approximately I am expecting a target of nearly 42 to 4,300 in short term perspective. Now coming to the counters like LTIM still is having a very bullish movement, but I expect that the 200-day SMA, which is lying around 52.50 odd levels, is a main barrier for LTIM until it surpasses the zone of 200-day SMA, because for me 200-day SMA holds a very decisive role in playing the trend play for any of the counters. So 52.50 is a very strong resilience for LTIM. The time it surpasses and having a sustainability above the same, then definitely one can try to accumulate this counter from medium term perspective. Overall, IT, large cap and mid cap are witnessing a decent traction in the recent period, and which is a sign that from here onwards there can be a good reversal or a gradual reversal, not very much aggressive on the targets, but there will be a gradual reversal in majority of the counters from short to medium term time frame.
All right, just want to point out that we have hit another fresh record today. The Nifty has made a fresh record of 23,667. Sensex, not really. It came close to the record high levels of 77,851, 77,808. That's the kind of high the Sensex hit in intraday trade. But when it comes to Nifty, we did manage to hit a fresh high today. But looking at some of the other stocks then, what are your thoughts on metal names like Tata Steel and Vedanta? Yesterday, Vedanta saw a very good rally. Today, Tata Steel is, maybe witnessing some bit of profit taking. But any of the counters that excite you?
See, from metal pack, there are few counters which is looking very positive for me. NMDC is a very strong candidate, and I expect that the recent surge, the yesterday surge in NMDC has triggered a consolidation breakout. So this can be seen as a buying opportunity in NMDC for a higher target of nearly 282 to 284, and followed by VEDL. VEDL is also looking very positive. It is having a very similar setup where it has given a consolidation breakout in the last trading session. So I expect these two counters, one should definitely keep their radar on. And even the Electro Steel is one of the counter. Electro Steel Cast Limited is one of the counter which has seen a very decisive up move on the back of volumes in the last trading session. So I expect that from here onwards there can be a strong move in this counter for let's say a target of nearly 188 to 190.
All right, that's the view on the metal pack. But some queries that are trickling in, I want to get them addressed soon. One query was on HAL, Hindustan Aeronautics. Would you accumulate the stock at current levels? Because we are seeing some bit of consolidation kick in, right? Today as well, the stock is under some bit of pressure. Krishna has sent this query to us. He wants to know whether he should look at booking profits now.
Definitely. If I have to tell you about the technical developments, the counter has been into a very drastic vertical upsurge. So this is a point where one should not become very much complacent in this counter. Try to book their profits on a time-to-time period. The overall trend remains bullish, but looking at the recent development, yes, it might attract some kind of profit booking in the near period. So better to book your profits. Again, wait for some kind of a decent correction near about 4600 or 4500 will be an apt zone to accumulate this counter, because overall trend is very bullish, but the technical parameters has obviously turned very strongly overbought. But looking at the recent developments, there is a negative divergence among the price action and the indicators, which is not very positive for the price movement. So I expect that there might be further correction, further consolidation, or it might attract further profit booking in this counter. So better to book your profits for the time being and wait for a decent correction. Not at every dip you need to accumulate this counter. Wait for a decent correction and then you may still accumulate for medium to long term perspective.
All right, that's the view on HAL. Hope that answers your query. Hold that thought. Osho will come back and discuss more viewer queries with you. But let me also bring on board our next guest for today. Joining me is Deven Choksey, who is the Managing Director at DRChoksey FinServ. Mr. Choksey, great to have you on the show. We've managed to hit a fresh high on the Nifty today as well. And, the record-breaking spree continues, barring one of the days this week when we saw the Nifty end flat with a negative bias. But here on, 23,600 is already on the charts. Would you expect levels of 24,000, ahead of the budget? And tomorrow again is the GST meeting that, has crucial significance. So next week, could we look at 24,000? Is it a possibility?
So good morning, Nandita. Well, I think we are trying to do the crystal grace, I suppose. 24,500, I think are possible levels, because currently the market momentum is absolutely very, very strong. There is no stop to this particular momentum at this point of time. Neither people are withdrawing money. On the contrary, as they earn more, they put in more money, and more number of investors are entering into the markets. Also because of the fact that we are having the new IPOs coming up, large size IPOs coming up, be it Hyundai, be it Ola. So those IPOs are likely to, I think, fetch new investors also into the system. So all in all put together, on one side you have got the strong liquidity-based momentum continuing in the market. On the other side, the corporate earnings, they are also showing the signs of robustness, and I think they continue to grow in the vicinity of 18 to 20% at least for, I think, the front line stocks, same and except I think the ITs.
So from that particular aspect, I think the things are absolutely okay. What is not very comfortable and not very okay is the kind of valuation at which the market is right now trading. Not the frontline stocks, not Nifty 50 stocks. Nifty 50 stocks are still reasonable in their earning and earning output both. But some of the mid-tier small companies, I think, are floating at a valuation which is never seen before. So that could possibly leave very little chance for the market to make any error, any mistakes, I think, by these companies. So on that front, I think one would be a little bit more cautious. But otherwise, I think the strong fundamentals outlook in the economy and the strong momentum flow because of the liquidity, both are continuing as far as the market is concerned.
Right. Deven, do you expect some bit of money to now flow into the IT pack? Because, this pocket has underperformed. And of course, on the back of news flow, we are seeing very good buying interest today. In fact, the Nifty IT pack is among the top sectoral gainers today. Accenture has tightened revenue guidance, but that hasn't deterred IT names are fairly unfazed by that, because there are some bit of positives as well that has been pointed out by Morgan Stanley. They've said that consulting business could return to growth, and there are pickup in smaller deals as well. We've seen the likes of Wipro and HCL Tech bag some $500 million worth of deals in recent times as well. So going forward, AI of course continues to be an opportunity, and TCS seems to be the only one that has declared its revenue in terms of AI. So would you be tilted towards names like TCS, because consumer discretionary demand has not picked up, and that's evident in Accenture results as well. But on AI plays, would you look at names like TCS and other mid-cap names right now within the IT pack, or would you say that the entire IT pack looks ripe for investment now?
So if your hunger is not for going beyond 20% return in IT, then probably this is the right time to buy into. Because I think they will not be producing the spectacularly large return for the investors. But at the same time, because of the sectoral rotations, the IT which has been up till now neglected could possibly find allocation of new funds. And allocation of new funds itself, I think, could drive the price for the IT stocks in the market. Everything else remains absolutely equal, because between yesterday and today and tomorrow, I think things haven't changed much as far as I think most of the IT companies are concerned. They continue to look forward to get higher amount of weightage and share from the newer technology platforms, be it AI, be it computing, augmented reality, be it blockchain, and so on and so forth. I think that is not question. They will continue to attract more number of business orders because of the world is changing. World is moving in that direction. So their customers, when they demand more, they will definitely be providing higher. The important part which I am observing, those companies which are offering software as a service are the ones who are basically getting the highest amount of allocation of money from investors. Those companies which are purely coding-based companies, and I think have little role to play even in the consulting. In my viewpoint, I think one will have to be one will have to wait for some time. So it's a shift from coding to computing to the cloud. I think that is where probably we are talking about the entire journey in the IT space, where I believe that I think things are likely to be remaining firm, particularly because I think the larger part of the technology platform, including the bandwidth on 5G, etc., is suggesting that higher amount of IoT play, higher amount of computing play is already on cards. We believe strong as far as IT is concerned, but the fact is that return expected should not be more than 15 to 20% from this side.
Is it time to book profits of course you mentioned that their valuations in the mid-cap space is, turning out of whack. But is it time to move out of some of these defense PSUs and perhaps look at entering banks now, which have just about started to fire up, especially the likes of HDFC Bank?
The rotation in the stocks is a reality. Be it defense, be it railways, be it manufacturing, be it capital goods, be it any other sector. This market is driven by the momentum, and for the momentum to continue, the investors stroke traders will continue to book profits in one segment and go to another one. That is a reality. Now, whether it will only be meant for the defense, it will not meant for something else, answer is no. To my mind, I think anything which is reaching out to the scale on the valuation will first attract profit booking. If some of the defense companies which are showing distinctly high amount of visibility as well as their business outlook is concerned because of the strong order book, if they continue to command the valuation which is absolutely crazy, then probably I think they will not remain at that level. They may have some amount of profit booking. Understand thing well that most of the defense companies are talking about progressing growth in the range of 20 to maximum 25%, whereas the market has ended up giving them valuation of 50, 60, 70, 80 kind of price earning ratios. I think that is where probably I think there is an element of profit booking requirement will be there. May not be deep cut, but at the same time, yes, gradual profit booking by the investors can't be ruled out.
So all these defense names are at par with FMCG valuations, right? But FMCG did see a lot of buying interest at a time when the markets, reacted to the adverse election outcome, right? We saw stock like HUL going up 6% on a day when the Nifty fell 6%. Since then, some bit of interest has fizzled out because government has signaled policy continuity. So, maybe there won't be as many populist SOPs that would be doled out by the government. But would you still say that even at, current valuations, a stock like HUL merits an investment?
See, want to be realistic. I think if the economy is growing at nominal rate of growth of around 11.5-12%, then most of the FMCG companies which are directly related to economic growth will continue to grow at around 15% and so. Now, that does not mean that across the board that will be the same level of growth. In some companies' case, I think the growth will be little tapered. In some cases, I think the growth will be slightly elevated and higher. So important part is that the growth is continuing, maybe in a smaller degree in some cases, and higher in the other cases. Because the disposable income in the hands of the customer is increasing. So that is the reason. Even the income is increasing, he is not going to go out and spend crazy. This is not a sector where I think you are going to invite a very sharp rise in the spending unless it is a festive season. So that possibility is ruled out. So given that situation, my reading says that I think the investor would be rational in putting up their money behind FMCG. Like I made a point about IT, in FMCG too, if your return expectation is not above 15%, then it would be a good time to buy into these cardiac stocks.
All right, last couple of questions really. How would you approach a stock like BSE now? Because, there were reports that government may look at, higher tax on FNO transactions, to curb the kind of euphoria that's been building up in the FNO segment, right? But BSE, of course, has been gaining market share in this particular segment. Could this be one risk going forward for BSE? Because even NSE is looking at, coming up with newer products to, to alleviate or to tackle stiff competition from BSE. But this whole thing about increased taxation on FNO transactions, could that be a big risk for BSE going forward?
No, I don't think so. Because A, it is a pass-through tax. So even if I think there is a tax which is increased because of the derivative transaction required to be covered, it will be only a pass-through tax. Second most important aspect for the traders, they don't mind paying tax or the cost, whatever you call it as long as they have the ability to earn. To me, the fundamental question is that I think as against the underlying equity market, the derivative market is posing a higher amount of risk, where investors are not earning enough. I think at this point of time when we talk, the number says that I think hardly 7,800, 7,850 traders out of the entire lot of traders who are operating the FNO market are making money. Rest of the people are still not making money. So I think even if you tax them, even if you dissuade them from trading, they will come to trading as long as they make money. That is the rationale that I put across. And that brings out the view that neither BSE nor NSE, whenever NSE gets listed, I think are likely to get affected on the valuation. Because exchange business is one such business which is not created on a daily basis by everybody. It's a regulatory driven business. It is created after now. And I think this platform is built on the trust. So certainly, I think we are not expected to see major change in the volume shift or major change into the preference shift. Yes, I do agree that I think there is a requirement to increase the floating stock in the underlying cash market, so that I think the underlying cash market can end up attracting better volume, better activities onto the exchange platform. But otherwise, I think the attack should not deceive the traders from the market.
All right, that's the view on BSE. But with that, I'm afraid we're running out of time. Deven, thanks a lot for taking out time and joining in and sharing your thoughts with us. Always a pleasure. Wish you a happy weekend.
Thank you. You too.
Thank you. Let's go back to Osho then, who's been waiting by very patiently. Osho, Map My India, that stock is on my radar. Yesterday, it was up 20%. Today, another 10% uptick. I mean, 2,641 there. That's where it's at. Would you look at levels of 2,800 anytime soon?
See, looking at the overall trend that it is going for in the last two trading sessions, because of the rating upliftment in this counter, it has seen a very strong sentimental buying. But overall, if I have to tell you, the trend remains bullish, and I expect that now one should not become very much complacent. If someone is having position, definitely keep holding your positions with a stop loss near about the breakout zone of 2,400, 2,350 odd levels. But from here onwards, the higher movement is expected to be somewhere on the hint side, because overall it has seen a very drastic up move. So I'm not expecting another 5 or 10% kind of a move in another one trading session. So, but still the trend is very much positive, and I expect gradually it will definitely reach the zone of 2,800. But before which there could be some kind of correction of profit booking towards the zone of 2,400. So there one should try to accumulate.
Okay, look at accumulating Map My India around 2,400 levels. Couple of queries that are trickling in. K. Naga wants to know your thoughts on India Bulls real estate. He wants to know whether he should hold on for a year or not. Now, this stock has seen a solid up move. In the last 5 sessions, we've seen a 18% up move. With a longer term view, is it a hold?
Yes, so looking at the overall turnaround in this counter has seen a very strong movement in the last 4 to 5 trading months. So overall, the trend has turned bullish in this counter. There might be possibilities that it might attract further movement on the higher end towards the zone of 170, 180 odd levels. But looking at the recent development, as you have mentioned, 15-18% kind of a move in a week. So this counter might attract some kind of profit booking, but that should be considered healthy. Near about 145.50 should be the support zone for this counter, and on the higher end 170.85 should be the resistance zone for short-term perspective.
There's another query that's come in on the QSR space. Satya wants to know your thoughts on a Westlife with a 1 to 2 year time horizon. You know, Westlife, I mean, some of these QSR names haven't really been able to stage a turnaround even in a bull market like this. Looking at the 6-month chart, 3-month chart, or even 1-month chart for Westlife, hasn't done much, stuck in a downtrend. So, I mean, would you advise investors to hold on to this number, to this counter, or to this space, or do you think perhaps look at other sectors where there's much more activity happening?
Definitely, as you have mentioned, this counter has not done very much drastic in the last couple of trading months, but overall, if I see the primary trend is still on the positive side. But looking at the overall development which it is making, any dip below the zone of 740 can give a very strong breakdown in this counter. So one should definitely be very much caution, maintain very much caution in this counter, because recently it has even moved below the 200-day SMA. So that's very negative for any of the counters. So I expect in the coming period, if there will be any surge above the zone of 880, 890, that should be auguring well for the buyers. But on the lower end, 750, 740, one should definitely keep a very strict stop loss if one to stays in the company. But as you have mentioned, there are ample of opportunities in the market which can provide you comparatively higher returns. So if one wants to switch, better to switch from this counter from someone which is giving a very strong alpha.
Right, that's the view. I hope that answers your query. Since we are talking about consumption, there's another query that's come in on ITC from Thanush and wants to know your thoughts. As when I was talking to Deven, he said that if you're looking for aggressive returns, then you need to steer clear of sectors like FMCG. Would you concur with that? Because ITC as well hasn't given any exciting returns in the last 3 months or even 1 month for that matter.
Correct. These kind of counters hold the patience of their investor, because over a longer period, if the time you hold these counters for a longer period, then within 1 or 2 years, after 1 or 2 years, you can see a very strong movement in this counter, which has already been seen in ITC from 200 odd levels towards 450, 480 was seen in a very short span of time, but it has taken a lot of time to have a very strong movement. So overall, yes, in the coming period, looking at the technical developments, the ITC counter is likely to consolidate in the short term period, but overall trend remains bullish. So if one wants to hold this counter, one definitely should hold it for a long term perspective. But for a short term perspective, there might be some kind of movement on the higher end near about 450, 460 is resistance, and on the downtrend 400, 390 is the support zone. So this is the short term range for this counter, but for long term, yes, you can hold this counter.
All right, that's the view on ITC. Hope that answers your query. But with that, we've come to the end of the query segment. Osho, what are you keeping on your radar for the next couple of weeks? What stocks would you like to recommend for our viewers this morning?
See, overall, there are various counters which are from diversified sectors which are on my radar. Firstly, from the metal space, NMDC is one of the counter which is in my radar. So definitely one should try to gauge the momentum coming in NMDC. Near about 270, 272 is the current market price. Buy around the same levels, 260 is the advisable stop loss, and on the higher end 285 is the target that I am expecting. Second one is Max Financial Services. MFSL is one of the counter which has gained a very strong traction in the last 1 to 2 trading weeks. So I am expecting that from here onwards there can be very strong movement that can be seen in MFSL. So for this, the short term target for MFSL is 1020 to 1030, while 965 is the advisable stop loss for short term traders. The other counter is United Spirits, again very strong movement, and in the recent period it has seen a decent correction from the higher zone. So I expect that current levels is very positive development for this counter, because it has taken support of 21-day exponential moving average. So one should try to accumulate this counter at current levels. 1270 I guess is the current market price. 1235 should be seen as the stop loss, and on the higher end 1320 should be seen as the target.
All right, those are the recommendations coming in from Osho. With that, Osho, thanks a lot for joining in this morning and sharing your thoughts with us. I look forward to interacting with you sometime soon, and wishing you a very happy weekend.
Wish you the same. Thank you.
Well, thanks a lot. But with that, let's talk about the new IPO that's opened up today. Stanley Lifestyle, the company is raising 537 crore rupees via its IPO. It has raised somewhere around 161 crore rupees from its anchor investors, which include the likes of SBI Mutual Fund, Nippon Life, HDFC MF, Quant MF, SBI Life. So a lot of interest around this. Good domestic institutions have invested via the anchor book. Aside of that, if you look at the issue per se, it comprises of an OFS of somewhere around 200 crore rupees vis-a-vis, in fact the rest of it, the 337 crore rupees will be the OFS portion. The price band is somewhere around 351 to 369 rupees per share, and each lot would consist of 40 shares. So that's one IPO to watch out for. A couple of brokerages have also given a subscribe rating to this particular IPO. But of course, whether you should or should not subscribe, log on to moneycontrol.com and you can read out, read up on what really the brokerages are saying about this particular issue. But with that, of course, leaving the market in good stead, although we have fizzled out from the day's high, the Nifty did manage to hit a fresh high, but right now it's below that 23,600 mark. But with that, completely timed out. Thanks a lot for tuning in. You guys stay tuned to Money Control for all your other news and updates, and have a great weekend.